Hi Bolovies, welcome to Community Living with your girl Malebo. So this is part 4 of your investment journey in 2021, and we just want to ensure that you've learned every single thing before you start on your investment journey, because we can't save our entire life. Saving does not create wealth, but investment can actually help us to have a stepping stone to a point where we can start creating wealth and start generating some form of income or profit from the investments that we make, right? So today this part is just going to cover the strategies that you may employ in your investment journey. These are not all the strategies in the world. You probably have read something that gives you a better strategy, or you probably have a better strategy at this point. Please share it down below. If you do have a really good strategy that you have been employing in your investment journey and so forth, right? So these are just for beginners to say, okay, what can you explore when it comes to the strategy to take when you're investing. And also it will vary from platform to platform, and from like whether it's a virtual platform or you are using like your banks, right, in terms of like the components of your investment journey or your investment package. So I'm gonna get right into it in terms of the very first strategy that you might employ. So the first strategy I'd say would be the time horizon. Like, how long do you want your investments to be? So if you're going to hold your stocks or hold your securities for a the second one is based on your risk appetite. So as much as you might have maybe a high risk appetite or low risk appetite, you don't want your investment vehicles to just be spread out either on very high risk assets or low risk assets, because if you're on this side you could lose it all. If you're on this side, you might stand a chance doing yourself a disservice by buying into risk adverse sort of assets, right? Because then you will always have profit margins that are very low and so forth. So yeah, so your risk appetite for me, I feel like, should be neutral. So if you're employing it according to, okay, I want to have good performing stocks or good performing securities, so I'm buying very high risk stocks, that could be a strategy, right? But just be aware that, especially if you're looking at your risk appetite, try to always have it in the center where it's not too big of a risk or too low of a risk, because here you stand to lose, here you stand to not gain as much, and you're already in the stock market. The whole point of being in the stock market and buying assets that are in the stock market is that you want high returns, right? As high as 200%, 600%, whatever percent that you can be able to get. So that's another strategy that you can look into as to your risk appetite. And then another one is the various portfolios that you employ. So I think it's Ray Dalio that is a big believer in Allseason's portfolio, right? So what an Allseason's portfolio is just that you buy different types of securities, and those type of securities they cover you whether it's a bull or bear market. A bull or bear market just means that the stock market is either performing good or it's performing badly, right? So you want to be covered regardless of what is happening, right? So let's just say when it's like the market is performing badly, you buy things like your bond, you buy things like your gold, because they hedge against the market. Hedging against the market just means they when it's performing really badly, then they perform well. So yeah, that's like what an all-season portfolio strategy would be like. And then when you have like good times, you buy your equities, you buy your ETFs, those type of like funds or those type of investment vehicles that do really well when the stock market is doing really well. So that is another strategy that you can employ. And also another strategy would be having a combination of conventional and unconventional securities, right? So you have things like digital currency or cryptocurrency, which is new, which is can be seen as speculative investment. But if you employ such things in your investment journey, it does help you to also have some kind of like high risk, but still gain from the high risk. Because right now, as we all know, Bitcoin is doing really well. So if you were someone that took the risk of investing in an asset that is so volatile, you would be reaping the short-term rewards or long-term rewards, because it could stay where it is and maybe only go up from here. We never know. That is the speculative component of it all, right? And then it's a very unconventional investment, right? It's not like an equity, but I feel like like the cryptocurrency market and the stock market perform very similarly. It's based on demand, because today if we all decide to buy the Coca-Cola stock, the stock decides to rise because it's based on our demand. We sort of set the price of Coca-Cola to say that, okay, yeah, I'm willing to buy one share for $300, for example, right? And then the next person, if they're willing to buy it for $320, then they sort of make that price to say, okay, now the price of Coca-Cola stock is at $320. Similarly to cryptocurrency, that is the same thing, that okay, today we having X amount of cryptocurrencies in the market, and I'm willing to buy one Bitcoin for $30,000 or something like that, and then I say, okay, yeah, I'm willing to sell it at that amount, and someone else is like, no, I'm willing to buy it at $35,000, then that price starts going in that direction that they swayed it in. So that's how the stock market works. That's how the cryptocurrency market works as well. And sorry about the clinging from the earrings. I don't know if you guys hear it, but yeah. So another thing would be for unconventional would be venture capitalism. So it is not something for everyone. It's very high risk, and but it will be just exploring unconventional ways of investing. So the stock market is not the only way of setting investment. Investment is something that could yield you a very high return. Could is the key word, right? It's not guaranteed. The risk is based on so many factors. Not every investment vehicle has like a risk rating of 90 or something. Some have a risk rating of 20 because the risk, when you analyze the risk, it's so low. And it could be that maybe you're going to explore green investments, such as like there's a bee and cherry tree, right? I forgot exactly. It's not Coronation. I forgot exactly who's offering this, but yeah, those are some of the unconventional investments that you could explore. So another one is livestock and IPOs. So when they're just introducing new stock offerings, then they have an IPO, so you could buy into that, but that's for rich folks, and most of us are probably not on that rich folk. But if you are going to have that rich folk money, then you might consider things like an IPO. So those are some of the strategies that you can look into where you are considering conventional and unconventional investment vehicles, so that you can have a more, I'd say, diversified and risk averse, or risk neutral. I wouldn't call it risk averse, because then you'd be on this side of the bar in terms of risk appetite, but then you want a risk neutral portfolio, right? So yeah, so that's all I had to say in terms of the different strategies that you can employ. There's, as I've said, there's so many other strategies, 100 strategies, and when you have started on your investment journey, you will explore a lot of them, and you'll find one that probably works for you. But the first thing is to start. So if you haven't started, please do start. Please, I implore you to start now, to start with whatever little money that you have to spare. It could be that you can only spare $100 a month. Start investing now and seeing how the stock market performs, how securities perform, how it all works, and then from there you start employing different strategies and seeing what works in your investment journey. So thank you very much, and I hope you've learned something new.